Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are in the correct place. Today is Thursday, July 11th, 2019, and before we can show any charts, we need to get our standard disclaimer out of the way. So let's go ahead and get that out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. So tonight's topic, we're going to cover a lot of different things, but I really want to talk about transitions. Let's get over to screen one where I have a Russell chart teed up and ready to go. So before we get in, we got a lot of visitors visiting us this week. Welcome. This is towards the end of the week here. Tomorrow morning is you'll be invited to the live room. Of course, you already have the links for that. Gary does have a webinar on Saturday morning. You'll be invited to that. So if you're on a free trial, of course, you get those links too. And what we're here tonight to talk about is transitions. So let's think about when we say transition in trading, what we're really talking about. So and before we do that, let me explain. Some of you may be looking at this for the very first time. We trade futures markets intraday, so we are flat at the close, and that's because we don't want any overnight risk. We generally start trading early in the morning, as early as 5:30, 6 o'clock, usually by around 8 Pacific. So this is all Pacific time. I'm here in California, so midnight Pacific is right here on this chart. So just equate that to your local time zone, wherever you're located around the world. The markets that we like in the live room are, of course, if you've been in live room this week, we trade the E-mini S&P futures, ES. We trade the Russell, $5 a tick, all of them on the September expiration date. We trade gold futures, GC. Some good gold moves today, and then of course crude oil, CL, and we'll look at that chart in a little bit here. We're connected to a data feed to our broker NinjaTrader, and so this is the data coming in. This would have been what happened overnight, right in through here, and we always have traded 4 range bars for years and years and years. That hasn't changed. Now, what you're looking at in terms of our indicators are background colors, bar colors, blue, red, and yellow, and the bands. You see the bands here. We have the mid band, the thick line in the middle of the 8 bands, 4 below it, 1, 2, 3, 4, 4 above it, 2, 6, 5, 6, 7, 8, total of 8 bands. Line 2 is the thin red line here. We feature that in our trades. Mid-band, of course, we trade that. And then the top of band 6 is called line 6. All right, so that's what the bands are there. We have the power meters. These are the short-term various trends on the chart, 4 different trends. We have the predictors, real-time support and resistance levels, and then of course we have these alerts, and I'll go through the alerts in a little bit. So let's talk about that. Any questions on the indicators? Most of you have seen this, so you're familiar with it. So that's all I'm going to do, just that quick 2-minute recap, so I can get directly to the topic at hand, which is transition. So when we use the word transition in reference to, in fact, maybe we should go back and just sort of elaborate on what we're talking about when we talk about market transitions. And I put an equal sign in here, or even a little arrow like that. if I was to list transitions, yeah, I'll show the alerts in a little bit, Louis. We can't really show alerts until we sort of work through the beginning part of this, and I'll move through it pretty quickly. So when we say market transitions, what do we talk? What is, if I have to fill something in here, and I have my first bullet point, I would put what? What would I put in here? What is it transitioning? What is it transitioning from and to? Right? The transition implies that you have a current situation or state of market, and then it's going to transition implies something different. So what kinds of transition are markets going through that we need to be aware of when we're trading? This is sort of the fundamental basis for how we're going to, this is sort of the foundation of what we're going to build on today. Brian K has typed in, when a market goes from a downtrend to an uptrend. Okay, that's one transition. What else? Short to long and vice versa, Louis? Okay, so that's very similar. Downtrend would imply, and of course you have the reverse of that, which would be uptrend transitioning to a downtrend. Now, is that the only ways that markets move? Well, we do have a third condition. We have sideways / no trend. And this is also known as consolidation. And I'm not going to put them all in here, but we know that uptrends and downtrends can go from up to sideways, down to sideways, up, various, they can go from up to down, then sideways. And so these transitions to sideways can happen from either direction. Right? Okay. So let's look on the Russell chart here now that we got a sort of a basis to work from in terms of our understanding on what the market condition is. And first I'm going to look at we're going to look at them together, and we're going to all sort of get on the same page as far as what the market's doing. And then I'm going to flash and show you a few where you're going to make a call on what you think the market's doing as little pop quizzes along the way, okay? Over here to the left, you can see that the Russell coming into the European session was, what do you think, in this area right here? In fact, I'd say I'd kind of do it this way. I'd say from here to here, and then from here to here, all the way up until, somewhere around almost 7 o'clock, 6:50 Pacific. Was the Russell trending or not trending in this area right here? Late Asian session, early European session, where I've shown these two rectangles. What do you think? What was the Russell doing in here? Any market that looks like this in the overnight session, what would you say? Is this example of trending market or not trending market? Pretty straightforward question, right? In here, in these rectangles, the Russell, any market that looks like this. Gold, oil, similar highs, similar lows. Background is all sort of striped colors. There's no solid color in place. Like over here, let's contrast that as you're pondering what that is. And I think obviously everybody has typed in the word sideways, which is correct. And so you can see a very stark contrast in yesterday's trading. This would have been yesterday morning on the Russell. You had several trend moves here. Here's an example of the tail end of a down trend, right? Red background, lower highs, lower lows, bands and market stair stepping down. We transitioned into an up market with almost kind of a V bottom. Later in the morning, we start to drift a little lower again, as you can see over in here. Close of the market U.S. time was right around here, around 1 o'clock, 1:15 Pacific. And so you're starting to drift a little lower. But then, when the Asian session and the European session kicked off overnight, you started to really consolidate right in here like this. So now one of the things that really is important to learn as you're building out your trading career and your repertoire of tools to trade, and you see him in the live room all the time from Gary. Gary, we jokingly sort of call Gary the line king because he loves drawing his lines. But let's look at how important the lines really are. Notice how right here, as the Russell comes up and puts this swing in, could we not put in a line right here, somewhere in this area, defining a resistance area, actually just a little bit shy of here, which was the swing at the late morning session on Russell. And then just a little bit into the European session, I think we would agree that support was starting to form in this area down in here. And so you can put a line there. Now, when you trade futures on your own chart or in the live room or however you choose to do so, it's really important to put real-time lines on your charts where support and resistance are, because understanding this scenario in terms of the market condition, the current market condition, is everything to your trading. Wouldn't you agree? In other words, when you are in a downtrending market, you're primarily looking to take what types of trades in a downtrend? Taking short trades. You're selling resistance on rollovers. We're retracement traders, right? So thrust, retrace, there's a short. Retrace, there's a short. Short, 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 short. Right. And then conversely, when a market heads up, we buy pullbacks. So you get a thrust, you get a pullback long trade, right? Pullback long trade, et cetera, all the way up. And that continues on. And we have three types of trades that we teach. I'm not going to spend a lot of time. We have entire webinars. In fact, I did a 2-part series on 3 types of trades last week. So I encourage you to watch that. Gary has quite a few too, webinars on the whole trade setup issue. That's not the topic tonight, but you have minimum criteria, mid-band, and deep retracements or phantoms. So where this kind of comes off the rails a little bit is when you get into these sideways choppy consolidation areas. And there's several reasons for that. If you are a mid-band trader, let me blow up this consolidation area on the Russell here a little bigger. Right in here. So one of the things we get all the time is, well, how do you know you're in consolidation in real time? It's always easy after the fact to go back and say, sure, the first 6.5 hours of the morning was in, choppy sideways, but you have the benefit of hindsight. I'm just going to very quickly show this. At 21:28, which would be 9:30 my time, was this swing established right here? Yes. And could you put a line here in this location, approximately right here? Yes. Let's say you're an overnight trader. You want to trade, you work in the day and you need to, you look at opportunities in the evening or early morning or whatever. And then maybe about, what is this, maybe an hour and a half later, did you get a swing more or less kind of down in here? Yes. So one of the important takeaways from tonight's webinar is that you have to know what condition you're in. You've got to know whether you're range bound or trending. And when you put 2 lines on a market just like this, and it stays, we have a saying that we've had for years, and if it remains within the confines of these lines, you are said to be range bound, choppy, or sideways. Now, obviously, you can see that trying to take mid-band trades in a range like this would be very difficult, because by the time you break out and try to get along here and fade this top and get out, there's no meat on the bone here on a trade, right? Likewise, if you're trying to get short, by the time you get filled on a short and you got to look to cover, there's no meat on the bone here either. So in cases of ranges where the mid band is in the middle, if you choose to trade it, you have to trade the extremes of the range. Now, I'm not going to spend much more time on that. I'm just going to say conceptually, that's how you approach it. Different instruments are different in how how smooth they are in respecting support and resistance. But needless to say, you're generally, if you're in a 20, 25, 30 plus tick range, and the mid-band's right in the middle, you're not taking mid-band trades. You have to trade the extremes, shorting the top and or buying the bottom. So that's when you know this condition, by the way of having lines to define it, this will in fact then define the way you trade. Yes? So the lines are critical in determining what you are going to do from a trading point of view. Now, some of you might say, and I've heard this for years, a lot of traders say this, that, well, I see the range. I see the range in real time. I put my lines there. I know, what I should do, but I just can't trade ranges. And every time I do, I get in late and I try to do short and I get stopped out and I buy and I get the ranges just don't work for me. Well, then what? So here's my question. If you're that trader where you say that you've tried this over and over, maybe in sim, and the ranges don't work, should you continue to trade them? Ranges. What do you think? You see them. I mean, you see resistance. You see support. You actually put the lines on your charts. I'm saying you collectively, everybody here as a team tonight, and you've tried to trade them, and for some reason they just don't work out for you. Then is this a market condition that you should actively trade? Yes or no? It's a pretty simple question. Yes or no? If you trade it and it doesn't work for you. Here, let me help you. I'll put something right on. Yeah, it's an obvious answer. Yeah, no. All right. So the approach to sideways markets is, let me just put it this way. You should try them in sim. I mean, give it a good, a good decent college try shot at it, right? And if it doesn't, and if it's not, if you're not proficient at it, you're not doing well, then of course that equals do not trade ranges. That would mean simply that your personal style is more akin to a trend. And what we've seen over the years is that, and it's really strange like this. We had an oil trader, some of you might remember her years ago, and she was a scalper, and she loved ranges. She actually did better in ranges. What was her name? Anybody here remember her? What the heck was her name? She came in every morning, and then she retired. She was with us for a lot, something Hopes or something. Cindy, what was her name? I know some of you remember her. Great Hopes or something. Remember, she was a scalper. She scalped crude oil all morning long. She loved ranges, getting in and out, short the top, cover at the bottom, get back in, range. Yeah, Kitty or Great Hopes. Yeah, you remember her. Well, now that's an example of somebody who's developed a skill set that they, and happens, but it's fairly rare, that they can trade ranges. Okay. They try to catch the runs, and they can scalp within a range. Now, that's the ideal condition. If you can train yourself to be able to do both trends, up and down, right? The entry points, and ranges, trends and ranges. But here again, I just want to underscore the fact that if you try ranges, and what you should do is try ranges on different instruments because it's different. ES, for instance, when it's range bound, the E-mini S&P, in fact, I'm going to look at that in a few minutes, it tends to get range bound for long periods of time. So if you don't know ranges on ES, be prepared to sit around on your hands for a couple hours. Right? All right. Okay, so moving on. So here we can see that Going into the U.S. Open of the U.S. Trading session over here at 6:30, Gary would have opened the live trading room somewhere at 5:55 Pacific, which would have been, I'm guessing, somewhere on the chart, kind of around here. You can see that we were starting to put in a succession of slightly lower highs through here, right? And then we come and we break the support, right? And we come up. We start to kiss what area on this lower range now, right? Support becomes resistance. We all know that. That's a theory that's gone back many, many years. Support becomes resistance. Resistance becomes support as markets move. Generally, that's not 100%, but it's pretty accurate most of the time. See how you get a sort of a kiss and roll here, and that this, aside from the fact that the support level was broken here, you can clearly see that you're getting a series of lower highs, with this one being even lower than that. So when you see this type of price action, in fact, now you're starting to set up a lower range below the prior range, and you see these kiss and rolls off this prior support resistance area right up in here, what are you starting to think might happen to the Russell? In other words, what transition might come from this sideways, given what you see here? Do you think it's going to break up? You could type in a U based on what you see here. This would have been about 6:45, not quite 7 a.m. Pacific time. Or do you think it's going to break down from this box right here? Type in a U if you believe that it's going to come out of here and head up. That would be a U vote. Or do you think that the Russell, based on the condition you see here, from this sideways region rectangle to this box right here, or do you think it's going to break down like that? That would be a D. Cast a D for down. You think it's going to break down? Or you think it's going to break up? That would be a U vote. Anybody there? These aren't rhetorical questions, by the way. I ask these to what I've found over the years in thousands of webinars. I've probably done thousands of webinars. The reason I ask so many questions is I find that the traders who participate generally are the ones that answer the questions that aren't rhetorical questions. They're actual real questions, like, what do you think is going to happen? Where would you take this trade? It's been my experience that those that do that usually do very well trading. And the ones that sit on the sidelines and just kind of stare at the chart, they're going to struggle. So it's up to you. I mean, you can participate. You cannot choose to do so. It's all your call. All right, 4 more seconds. Are we going to break up or down? U for up, D for down, out of the Russell range here. Time's almost up. 2 seconds. Cast your vote. U for up, D for down. Up would be like that. D would be a break of support down this way like that. Okay, time's up. Most of you said down. All right, well, let's play it out. Here's 6:44. Here's 6:48. Here's 6:51. Coming up on 7 a.m., 6:54. And so the resolution was, if you voted D, you were right. The resolution was down. Good. So the takeaway here in a transition in this example here, let's go back and recap, and then we can get another market up here. See if I can get all this together and just do a quick recap. So the previous day's trading from yesterday was a series of a downtrend for most of the morning. We put in a V bottom here, a reversal. I'll talk about that in a second. We run up into the close, up into about 10 o'clock Pacific. Actually, yeah, it's about 10 o'clock. We pull back into the close with a slight drifting downtrend. And then in the Asian and European sessions, we sort of drift sideways with a slight bias to the downside, simply because we're putting in lower highs and lower lows with a lower region area as noted here into the U.S. Open. And so therefore we are looking for short trades. Short trades. Come up, kiss resistance, mid-band, short. Come up, kiss resistance, mid-band, short. So this turned out to be a pretty nice short trade. As I recall, this thing dropped somewhere around 100 to 120 ticks. So this was just a beautiful trade. In fact, what we try to do, and most of you know this, for everybody visiting, and there's some late birds coming in, welcome. Don't worry, this is recorded. I see quite a few just still coming in. Don't worry about it. You missed about the first half an hour, but it is recorded, and it'll be on the web tomorrow, so don't worry about it. Especially if you have to leave early. Don't worry about that. We got you covered. Yeah, so here's an example where you went up, you went down, you went up, you went drifted into close, you went sideways, and this is what we talked about can happen. Markets can go from down to up, from up to down, and then from either direction, up to sideways, down to sideways, and then there will be a resolution from the sideways condition where a market will then continue upward, right, with a break to up, and then you go back into an uptrend, or a continuation down. In this case, it was down, and you go into a downtrend, and you're taking shorts. Okay, good. Everybody did great. Total gold stars. All right, let's do this. I want to get some other markets up here before we run out of time. Let's go ahead and let's get some votes in. What does everybody like to trade here that you want to see tonight? CL, crude oil, gold, GC, ES, YM, NASDAQ. You want to see any currencies like 6E, dollar index? Crude. Okay, we got so many crudes. You crude traders. All right, let's get some crude in here. Okay, so now that we're all experts on transitions in markets, trending markets, and sideways markets, I'm going to ask you this. I'm going to ask you to assess the gold. Gee, many Christmas. I'm sorry, I've got gold on the mind today. I cannot get gold out of my head. Everything I talk about, I thought was gold today. It's driving me nuts. All right. Let's not get all panicked here. Let's say before the crude pit, right when the crude pit was opening, the market looked like this. Let's reconstruct when the live room opened and the crude pit was just about to open. Crude oil market looked like this. All right. So if you came in late and you didn't hear this earlier, it's okay. But for those of you that have been here, what is the first thing we do on our charts? Kind of a gut check to see if anybody's paying attention. What's the very first thing we do? You get up tomorrow morning and you're all excited and you log into your data feed and your crude chart comes up and you're all excited. Here's Friday, we're going to be trading crude, making good money, and the weekend's coming, blah, blah, blah. You got plans, whatever. But you got to do something first, right? Here's your chart. It's all filled in. All these bars are starting to come in. Not inventory, but crude pit's starting to open here. Draw support and resistance lines. Good. All right, so let's go ahead and do that. I would submit that you could put one, I think you would probably agree, you could put one kind of down in here. I mean, there's several of them. It's not particularly clean, but we can, I want to, when I say this, I want to put a caveat on it. And I think this is going to help most of you visualize when we say support and resistance, they are areas. In other words, markets just aren't perfectly just going to sit on a line. Sometimes they do, but not very often. So it's an area. Okay, so you want to just look for a preponderance of candles around an area and just go ahead and put a line there. Don't agonize for a half an hour to put a line on a chart. Okay, just kind of look for where the candles are bouncing up and down and just go ahead and throw a line on the chart. All right, that's just a frame of reference is really all that is, okay? But just to be clear, it's an area. not a number. Now, we might say in the room, we might quote a number. We might say, well, it looks like, crude support is around 48 right now. That's simply because we have to say something. Or we might say, well, it looks like support is between 40 and 50 in the 45 area. I would put a couple other lines on here at the pit open. I'd put another one maybe somewhere up in here. And then I would put another one perhaps up near these triple quadruple tops up around 60, 85-ish. So in this case, it looks like you've got 3 lines. And so the range here is about how big? 40 to 45 support, 70s here, that's what, 25 ticks, and then another 20 ticks up, you got 80, 85. So this whole range is about what? 45 ticks, 40, 45, 50 ticks, roughly, top to bottom. Can you see that, like tomorrow morning, if you wake up and crude looks like this is what you would do? Now, would you all agree then that if crude tomorrow morning or whenever trades within the confines of these lines, that you are said to be what? Yeah, sideways, consolidation, range bound, what we said earlier, right? Yeah, and could you put another line down here? Of course you could. I mean, you could say there's another level of support anywhere down around, 20, 25-ish. So there's your 1, 2, 3, 4 lines. Yeah, so I mean, there are times, and it's fairly rare on crude. Crude moves normally pretty good. And it's not to say that this is good or bad. There are periods within ranges, large ranges, where you can get trades. So for instance, let's look over here before we look at this morning. Just to frame this out for you time-wise, this is midnight Pacific right here. So once again, you're coming from the close. This is late morning Pacific time, 11:30. Today is Thursday. Yesterday was inventory day. I'll go back, we'll look at that. There's a big trend, big swings on inventory day, right? And then you go into the close right here, 1 o'clock Pacific. And then it started to try to drift higher a little bit. So you could make the case that you had a couple of pullback long trades right in here, right? Off the mid-band, see the bounces? Push up, background turns green. So while you're sort of sideways, there are these little mini or micro trends that set up where you could take trades, right? Long, long, long. You could even make the case of, sort of a deep retracement long right in here. So long, 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 long. And now you're starting to drift south, but we got support in here, so we'll have to see what happens. Let me continue on. Now I'm going to recreate the morning as if we're watching it together in real time. And you tell me, you type in by saying putting a T, that you think that the market has gone out, had transitioned out of a range and into a trend. Are you ready? Okay, here we go. So we're right now at 5:47 going into 6 o'clock crude pit open. And here we go into the morning. T, when you think that it's transitioned out of the range into a trend. Here we go. Okay, there's 6:05. The crude pit's open. 6:14. 6:24. 6:35. U.S. equity markets are open now. 6:53. 7:01. 7:06. Now I'm doing probably 500 times what the speed would be because I just took about a minute and a half and showed you essentially an hour plus of bars. So this is moving pretty. Obviously, the crude market doesn't move near this fast. I just showed you an hour bars in a minute and a half. But let's continue on. Remember, if you think we've come out of the range, you signify it by typing in a T. Let's continue on. 7:10, 7:22. Excuse me, 7:31, 7:52, 8:04, 8:28, 8:40, 9:11, 9:53. We're at 10 a.m. Pacific now. 10:09, 10:26. So we're showing pretty much almost the entire morning here. Continuing on. 10:58, almost 11 o'clock. 11:30. And there we are. That's all the data. That's where we sit right now. 60.46 on August expiration crude oil futures, right here, where the market is sitting right here. Now, I noticed, interestingly enough, and I want to go back, now that you see all of it, I want to ask two questions. First of all, given what you saw in crude today, would everybody in here agree that these lines to see this are absolutely critical? You would agree, yes? I mean, let me go back. Let me go back to 6 o'clock. Where was 6 o'clock? 6 o'clock was way back here. Yeah. Put these lines in, remember? Remember us put the lines in, remember? Now, going forward into today, with as choppy as crude was, I think you would agree it would be pretty tough to trade crude without those four lines. Would you agree? And that's how critical these lines are. When you first, and this is like number one priority when you get your charts and you get them all set up and you're ready in the morning and the data comes in. Because what we do here, and I've said this scores of times, I can't even remember how many times, is that the live room is intended to provide insight or Gary calls them trade calls, but they're really not intended to be trade calls per se. They're observations of where trades could potentially set up. But those calls in the room and the observations you hear in the room of market behavior should reinforce what you already see on your chart in front of you. In other words, you should already have lines here on your own chart that you put there yourself. And then you look at the room charts, and maybe you take a look at where Gary put his lines. Okay, maybe you adjust them up a little bit or you adjust them down a little bit, whatever. But you got to have the lines on there, right? And then when somebody says, well, I'm going to buy support, I'm going to short resistance or whatever, this should be reinforcing trades that you already looked ahead. You plot those lines as soon as you fire up in the morning before you start trading, Tony. This is like a number one thing to do. In fact, it's that important. I'll literally put it right on the chart. So the first thing we do each morning as we prepare to trade. Oops, what the heck is that? Morning. As we prepare to trade for the day. And my typing's horrible. And it's not complicated, is we do what? We put in support and resistance lines. Tense. This is A number one. In fact, I'm going to put it A number one when you prepare in the morning and you bring up a chart. And what you derive from this will be an observation of the market condition on whether it is trending or not. Because we can't make a trade decision unless we know whether it's trending or not. So the byproduct of this exercise where the lines are placed on the chart is to determine, are we trending up, are we trending down, are we going sideways? So this is what you're going to ask yourself after you put the lines on, right? That's what we do. And then if you want, you would log into the live room. Look at where, double check your lines, see if Gary kind of has them or you have them, right? That's a good double check for you. Maybe myself or him, you will call out some support and resistance area. You can move your lines around, make sure you're all set. Now, there's two different things to observe here and the takeaway from this. There's one thing where you observe whether you're range bound or trending. And if you're range bound, it doesn't necessarily mean that you're not going to take any trades. In fact, there was only a small handful out of all the people here. We got a great turnout. 1, 2, 3, 4, 5, 6, 7, 8, 9. There's only 9 people that put in a T. And now that you look back on it, and I continue and I show the entire day in its entirety right here, you can see that it never broke out of the overall range on crude for the entire day. Can you see that, everybody? Can everybody see that? The entire day was spent between here and here. All of it. It never broke out. There was never a T. Was there? Well, here, let's go advance it to where we are right now. Now that you see it. And so that's why we encourage a lot of practice with market replay. Right? Market replay is invaluable to you, and you can scroll back and forth and do it very inexpensively without a lot of recording. You just kind of go back and forth, right? Back and forth, look at the markets. Now, were there trades here? Were there trading opportunities? Sure. Was this a chance to take a couple of quick shorts? Right in here? With that thrust where it kind of broke that one support. And did you have a short here? Sure. In fact, I think we called those out in the room. I think Gary called out 60, as I recall. Didn't he? Remember? I think he called these out. Transition to an up. Broke up, pulled back. Could this have been a long trade off the midband? Sure. So don't misunderstand what I'm saying. Some people say, well, are you saying that it's range bound, there's no trades? That's not what we're saying. We didn't say, well, you can't trade it. What we're saying is you have to trade it differently than a condition like this. Let's go look at a pure trend move where you are looking for retracements to support. Let's take crude oil, for instance, and look at after the inventory numbers and contrast what we had today. Here's crude yesterday after inventory. So one thing we want to make sure of, most of you know this, of course, is when you trade crude on Wednesdays, unless it's a holiday, there's going to be inventory numbers at 7:30, and you got to wait at least a minute, especially if you're in a combine and trying to qualify for funding with one of the funding sources out there. Here was our shotgun. Here's a million bars coming in all at once. You really don't want to trade that. You want to get out. Here's 7:30 over here. 7:31's here. So all these bars came in a minute. You don't know where you're going to get filled. You don't know what your stops are going to be. It's horrible. You got to wait at least a minute or two. But notice what happened here. The news bots, I forget. Does anybody remember what it was? It was a huge drawdown, wasn't it? Wasn't like they expecting like a drawdown of 1.7. It was like 9.5 or something like that. Anybody remember? I could look it up. Sometimes it's the old buy the rumor, sell the news, right? You know how these news bots are. Everybody knows what. Does anybody not know what news bots are? What am I talking about? News bots. What are news bots in trading? Anybody know? I say that all the time. I just assume everybody knows what it is. What do we talk? What is the word news bots? What does that term mean? News bots. What the heck is a news bot? Why is that important to us? Why do we care? Yeah, here it is right here. Here's Forex Factory. This is exactly what happened on crude yesterday. This is why you want to be out of the market. Crude oil inventories expectation was a drawdown of 1.9, and they actually got this, 9.5. So that's a huge miss, right? I mean, it's not even close. That's like a factor of 4.5 or more that the drawdown exceeded expectations. So let's take a look at what the market did leading up to the inventory. Overnight on the day of the inventory, the market looked like this. So a drawdown, additional drawdowns from the inventory in crude oil, is that bullish or bearish? What do you think? Drawdowns to inventory, bullish or bearish? What's your thoughts? So it drew down 4 times the inventory than expected. Is that a bullish thing or is that a bearish thing? Do you think anybody, any market participants, any traders might have had that news ahead of time? That's an interesting speculation. Well, let's look at what the market did all through the European session, all the way to the inventory numbers here. Was it going up or down? So what do you think? Bullish or bearish? You think anybody knew that number might be bullish? What? Somebody knew? Really? Say it isn't true. Say it isn't so. No, it's bullish. A drawdown in inventory is bullish. Okay? A huge build in inventory is bearish. And so what news bots do, and of course the big boys and the algos, they all know. The number they all know what the number is going to be, or they have a pretty good idea what the number is going to be. And so of course what they did is they ran oil up into the inventory. Oh my God, that's not fair. That's reality, Dr. Phil. It's been like that for some time. You just have to accept reality. All right, now let me ask you this question. After the inventory, I'm going to advance it in real time, like we're going to recreate what happened. You tell me if there's a transition from long to short where you would want to be trading the short side, a transition on oil. If you think it's happening, you would type in an S. Are you ready? Is everybody ready? We're going to do a quick exercise on crude. Are you ready? Okay, here we go. All right, 730 shotgun. Here it is. 730 shotgun, 730 shotgun. Here, 730 shotgun, tail end of it. 730 shotgun. Okay, here's 731. All right. 732. 733. 3 minutes into the crude inventory numbers. 7:30 yesterday morning Pacific time. 7:35. So let me pause right here. Okay. With this thrust right here, through this support level to mid-band, and it does an ABC, A, B, C, what happens to the color of the background here? Is it still green? What happens to the mid-band and the bands around it, and what color are the bars? Okay, let's do that one again. I know, some of you are seeing this for the first time. It's okay. It's okay. This is how you learn. You got to look at quite a few of these. Practice, practice. Here we ran it up all night. Long trade, right? Mid-band long trades. Thrust, retracement, long, all morning long. Shotgun, huge drawdown. News bots taking profits. News bots taking profits. Comes down, turns red, kisses off the mid-band, and is this a short trade? Yes or no? Right here. Is that a short trade right there? Yes or no? Yeah, it did change, and that is a short. Now, let's do a second part of the same exercise where I'm going to continue to advance crude, reconstructing yesterday morning after inventory. And you tell me, now we're all kind of saying and buying in, pinky swearing, whatever, that this is now a downtrend, and that was a legitimate short. We all said yes, right? Okay, background is red. Looks like we might head down. Could be profit taking from all the market participants, all the bulls, all the news bots that are taking profit up here are now could possibly push the market down. Or what might be happening here? Could this be as simple as a deep retracement on an overall continued move up? Now, when you think that this market's going to continue down, then don't do anything. If, however, you think that the market is going to start heading back up, and when you see it, you will type in a U. Ready? Here we go. let's see, 735. Continuing on with crude. Yesterday morning after inventory. A U, when you think an uptrend has resumed, you type in the letter U. That's all you got to do. Now we're at 8 o'clock. 8 o'clock Pacific. 8:29. Room is closed. Live room is closed. Everybody's on their own now. 9:30. 10 o'clock. 11:30. 11:28. All right, let me go back. Here's one thing, and some of you are just learning this completely for the first time, so I totally understand. It might be hard to see it, and this is something that takes time, and more specifically chart time. You just got to put not a lot, but you got to put a fair amount of chart time in. You've got to watch things closely for an extended period of time. You have to be quiet, uninterrupted. This is a way that you can make a living, you can make money, and it's a serious thing. This isn't time to put cartoons on and go drink soda and have a big coffee and have a party and dance with your dog. You gotta watch these charts. You gotta really pay attention to what's going on. Now, would you not agree that when this swing was taken out right here to the upside with this thrust, what happened to the color of the background? Was it still red? Right here. What did that thrust do to the background color? Right in here. Anybody? Is it still red? In other words, let me put it a different way. When we were looking at the market when it was doing this, and it came back to the mid-band like that, and we said, well, maybe there'll be more profit taking and the sellers will kick in, then we would have anticipated that it would do what? That. But did it do it? Did this happen? No. We went quite the other direction. We continued up. Now, let me, in background, turn to a transitional color. That's your clues. It's like the market gives you breadcrumbs and clues along the way that you need to observe and take as you take trades. Is these two swing lows in this area right here higher or lower than these swings right here? Higher or lower? Here versus here. Higher. It's obviously higher. Now, as we're watching this in real time, and we're now at 8 o'clock, so 8:30, so the crude inventory numbers have been known for almost an hour now. That when you see the breakup and the transitional background occur, and this, as you make note of the fact that it didn't not only return to here and didn't break it, but now you're getting a series of higher lows above band 2. Do you think that this area right here is a clue that the market may continue to start heading back up? What do you think? So these are clues. This is the breadcrumbs that the market leaves for you to observe. And so it's really important that we pay attention and we look at those transitions, right? The transitions are keys to understanding, okay, have we gone from up to down? Have we gone from up to sideways? Did we go from up to down and now we're sideways and possibly now we're going to go back up? And the resolution was we popped up. Now notice what happens here. And I know what you're probably thinking is you're saying, well, if you're saying that this is now an uptrend, where should I get long? Well, now you have a couple of different options. For those early adopters, those of you who are, watched a lot, you maybe got a lot of chart time in, you got a lot of experience watching these transition trades like this, the more aggressive entry long would have been out of this box right here with a very tight stop. You put a region box on there using the object trader tool. Maybe you're filled on the close of that bar or one of these bars right here. It's kind of dinking around. Support's sitting here just around 42-ish. If you take one of those, you put an extremely tight stop right here under that swing. Don't put it 15 ticks down, put 3 lot on, or 4 lot and put 15. No, just a very tight. So if you get fill, 1 or 2 lot, dip your toe, and it whips on you, you don't get beat up. All right, and then maybe it tanks and off it goes, but that's not what it did here. Now, if you're not that aggressive, or maybe you just didn't see the transition occurring, or whatever the reasoning is, that once you thrust up here, we take this swing out, we take all these swings out, the background turns green, the bars are blue, the mid band and all the bands are stair stepping up. We have transition from sideways, from up to down to sideways to up. That has all occurred in this area right here, what I just described. Up, down, sideways, transition to up. And if you miss this box right here, is there another place to get in long? Yes or no? You don't even have to say where it is. After this thrust here, and you miss this box right here for whatever reason, you either didn't see it or didn't take it, or whatever, you just didn't take it. Is there another spot where you could get long on a retracement on crude? And this would have been right around, say, 9 o'clock Pacific time, 9-ish. Yes or no? Just a wire and in. Or is there a long trade on here somewhere? Remember, we are retracement traders. Let's look to the left to observe the right. Let me show you some examples over here of long trade entries, and you see if you see something similar to the right. Here's some examples of thrusts up in an uptrend. Here's a pullback to the midband and a bounce, right? Let's do one more. Here's an example of an uptrend thrust in thrust up in an uptrend, and here's a pullback to the midband right here like this, and then we shotgun. But you can see there's scores of them here. I mean, they all every time it went up, boom, 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 held the midband, all long trades. So let's go back and reconstruct this. There's your short. There's your transition. Background turns to transitional color. We get the higher low just above band 2, sitting above our prior swing here. The background is now transitional. If it's going to break down, it would kiss and roll and go this way. If it's going to head up, it would break these swings and turn the background green, as it did right there. Now we know we're not thrust traders, so we don't take, when a market pushes in a direction like up, like that, we know that's not where we get in. We got to patiently wait for a retracement. Now, do we get a retracement? Let's see. Let me blow this up and ask you a question. Everybody, it's the last question of the morning, or the evening here before we wrap. Are these pulling bars right here pulling back an acceptable level to take a long trade? Yes or no, right in here? What say you, team? Is that a legitimate long trade entry on crude? Yes or no? Of course, the answer is yes. Of course it is. Everybody can see that, I mean, how many analogies did I draw over here? All these analogies. This was absolutely just a perfect long entry right here off that retracement. Background turns green, bars are predominantly blue, midband, all the bands are stair stepping up. We've gone back into resuming our uptrend. You buy back in here, and then you ride that pup for all she's worth. And that turned out to be a beautiful trade. Look at that. Thing wound up lasting over 2 hours, and it went from here at 65 all the way to 50. That's 90 ticks. $900 a contract. Put a 1 lot on here, that'd be almost 10 bones right there. So yeah, does it require some patience to see and take those? Of course. The normal tendency for most traders, including me, I still fight it. 25 years of trading, I still fight it. Yeah. You see a market going up, you see a thrust. Natural inclination is to pull the trigger. When a market starts going up like this, yeah, that you want to get in, you want to hit the market buy, whatever. It's never going to pull back. I better get in now. But as soon as you say that, what does it do? Huh? Almost every time, what does it do? Pulls right back to support, and right as you're getting stopped out on that market entry at the peak of the thrust, everybody else is getting in. Yeah, you'd put a region box here, long only, Robert. And the reason we do that is because, at the time you take this, you don't know, it might go a little deeper. It might go into here, it might go down into here, and you don't want to be short. You're looking to get filled long. So in a region box would be long only, and you'd be filled on close of that bar or that bar right there, long only. Yeah, and your initial stop, keep it tight under the box, or you could even go into the mid band if you wanted to minimize your risk. Okay. All right. We ran a little bit over here, but that's okay. We got a little bit of a late start. Let me stop the recorder. Any final questions before we wrap up here?